Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Index Research Specialist with Nasdaq Investment Intelligence, to discuss an index which is comprised of non-U.S. incorporated securities with at least 5 consecutive years of increasing annual regular dividends. Sanjana, it's great to see you as always. Welcome back to Trade Talks. Give us a brief overview of the index you're highlighting today.
Sure, Jill. So this index that we have, the Nasdaq International Dividend Achievers Index, ticker DAT, is comprised of non-U.S. incorporated securities, as you mentioned, with at least 5 consecutive years of increasing annual regular dividends. And recall, in the past, we have provided a preview of another index that we have, DAY, which tracks U.S.-based securities. This index has a strong return profile and high dividend yield, which is likely attractive to investors in the face of a global slowdown. Year to date, the index is up 8.4%, which is a reversal from a loss of 11.8% last year.
All right, let's dive deeper into it. Let's take a look at your first slide here and tell us about the index composition.
Sure. So as you can see in the first slide here, we have tried to provide a preview of the top 10 names of the index. And as you can see, the top 10 names make up 38% of the index weight, suggesting that it's not very heavily concentrated at the top. And if you can see, 50% of the top 10 in terms of index weight consists of companies operating in the utilities industry. So it does have that heavy tilt towards utilities. We do see representation from other industries, including the energy, telecommunication, and financial services industry. And 6 of the top 10 names are actually incorporated in Canada. And as you can see, the top 3 names include Algonquin Power and Utilities, which has the highest index weight of 4.4%. This is a regulated utilities company with a very diverse portfolio of renewable power generation. And you have Brookfield Renewable Partners, which is also focused on renewable power, BCE with the 3rd highest index weight, operating in telecom. And we even have a financial services company, Canadian Imperial Bank. So some of these companies are participating in the transition to renewable energy and modernization of the grid. And that's something we wanted to highlight.
And what about the performance of the top 10 holdings?
Sure. So as you can see in the next slide here, the top 10 companies registered an average loss of 18% in fiscal year 2022, which is higher than the average loss of 12% for all the index constituents. And this year, the top 10 companies are actually up they're up 8.3% year to date, higher than the average returns of all the constituents of 5.2%. And what we wanted to highlight here, you see Enbridge, which operates in the energy industry, was the sole outperformer in fiscal year 2022, up 7%. And this year, we see the gains extend beyond energy. You actually see 6 out of the top 10 companies registering gains, led by Algonquin Power and Utilities. It's actually up 31% this year after being down nearly 50% last year. Other things worth highlighting here, you see Brookfield Infrastructure Partners and National Grid, which have also generated very strong double-digit returns this year, up 22 and 15% respectively, down from 26 and 12% last year.
And how about DAT's performance relative to its benchmarks?
Yeah, so in this slide here, we have actually compared the total returns of DAT with the total returns of 2 broad-based benchmarks, the S&P 500 and the Nasdaq 100. And as you can see, it has underperformed these broad-based benchmarks. It has returned a cumulative return of 71% for the period that we have studied. And this compares with total returns of nearly 500% and 256% for the S&P 500 and the NDX. So these are impressive double-digit returns. I mean, history does attest to the benefits of having exposure to international equities, as they've outperformed over half of the time periods if we go back over a period of 50 years. Over the last decade, though, we see that US stocks have outperformed international peers, largely due to a very favorable macroeconomic environment and faster earnings growth. Additionally, the Nasdaq 100's heavy exposure towards technology and other top-performing industries, such as healthcare, have contributed to its relative outperformance.
And what about industry exposure? What stands out to you the most here?
Sure. So as you can see here, we have captured the industry exposure of DAT and other dividend indexes that we have, the DAA and the DAY, which are US-based dividend strategies. When compared to DAY, you see the consumer staples has a much smaller representation in DAT with an index weight of 1.5% versus 17% in DAY, while energy has a much larger representation in DAT with an index weight of 12% versus 3% in DAY. And in terms of performance, what stands out here is the energy sector. This was the sole outperformer in fiscal year 2022, up nearly 10%, but it's one of the 4 sectors that is down this year. And you also see impressive double-digit returns from real estate, utilities, technology, and industrials year to date. When compared to declines last year of double digits.
And finally, how about country exposure?
Sure. And as you can see in this slide here, the countries with the largest allocations include Canada with a total index weight of 52%, followed by the United Kingdom with an index weight of 14%. The countries with the smallest allocations include Denmark with an index weight of 1% and Guernsey with an index weight of 1.3%. And what's worth highlighting here is that Denmark and Guernsey were the relative bright spots registering positive returns both in fiscal year 2022 and year to date. Germany also stands out here as it's reversed its loss of 38% in fiscal year 2022 to a gain of 29% in fiscal year 2023. You also see Mexico and Bermuda, which have registered strong reversals from double-digit losses of 12% and 26% to 17% and 18% respectively. And what's also worth highlighting here is that this index offers a high degree of exposure to companies incorporated in Canada and the UK, which have dividend yields higher than global benchmarks for the period 2013 to 2023.
All right, Sanjana, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much, Jill.